What if I told you that a cancer testing company just posted record revenues, launched a groundbreaking new diagnostic tool, and is sitting on a $30 billion market opportunity, all at the same time? That's exactly what's happening at NeoGenomics, and after digging into their Q4 2025 earnings call, I've got the 10 most important things you need to know. Whether you're an investor, a healthcare professional, or just someone watching oncology innovation unfold in real time, stick around, because this one is packed. Coming in at number 10, let's talk revenue milestone. NeoGenomics delivered record revenues in Q4 2025, bringing in $190 million for the quarter, an 11% jump year over year. That's not just a good quarter, that's a statement that the company's growth strategy is working. At number 9, zooming out to the full picture, full year 2025 revenue hit $727 million, representing 10% growth over 2024. The company ended the year with strong momentum, driven by deeper penetration into the community oncology market and a disciplined shift toward higher value testing. Number 8 is all about NGS momentum. Next-generation sequencing revenues surged 23% year over year in Q4, well ahead of the overall NGS market growth rate. Remarkably, the 5 NGS products launched back in 2023 now account for 23% of clinical revenue, proof that NeoGenomics can commercialize innovation effectively even when entering markets later than competitors. At number 7, we have to talk about their community-focused strategy. Studies show that roughly 80% of all cancer care is now delivered in community settings, and NeoGenomics has deliberately built its commercial engine around this reality. Community oncologists are guidelines-driven, and Neo's combination of fast turnaround times, easy ordering, and a broad test menu makes them the go-to partner for these physicians. Their Net Promoter Score of 79, and rising, backs this up. Number 6 is the PanTracer Pro launch. Just last week before the earnings call, NeoGenomics launched PanTracer Pro, a new test that integrates broad genomic profiling with diagnostics-directed testing in a single order. This rounds out their PanTracer portfolio for solid tumor therapy selection and streamlines the ordering experience for oncologists, a key competitive differentiator. At number 5, let's look at 2026 guidance. Management guided for revenues of $793 million to $801 million, representing roughly 10% growth at the midpoint. More importantly, adjusted EBITDA is expected to grow 27% to 31%, reaching $55 million to $57 million. New products like RaDaR ST and PanTracer Liquid are weighted toward the back half of the year, giving room for upside. Number 4 is the RaDaR ST launch, arguably the most exciting near-term catalyst. NeoGenomics is executing a full clinical launch of its RaDaR ST MRD assay this month. The assay secured MolDX reimbursement in 2 approved indications, HPV-negative head and neck cancer, and a subset of breast cancers, and 2 additional cancer indications have already been submitted for approval. Gaining those approvals could effectively double the eligible patient population. Number 3 highlights 10 consecutive quarters of positive adjusted EBITDA. Q4 2025 marked the 10th straight quarter of positive EBITDA, with margins improving sequentially every quarter throughout 2025. This kind of consistency signals not just growth, but improving financial discipline across the organization, a critical milestone for a company making this level of investment in innovation. At number 2, margin expansion is becoming a real story. Gross margins are expected to improve by 100 to 120 basis points in 2026, and management expects most of that improvement to flow directly to the EBITDA line. The company is intentionally shifting its testing mix toward higher value, higher margin products and rationalizing exposure to lower value volume, a smart long-term trade-off. And the number 1 takeaway, the MRD market opportunity. NeoGenomics estimates that the addressable market for therapy selection and MRD testing exceeds $30 billion, and they believe they are uniquely positioned to capture it. With RaDaR ST launching now a next-generation ultra-sensitive whole-genome MRD assay in development targeting a potential launch as early as 2028, and a sales force being tripled, NeoGenomics is making a very deliberate, very large bet on becoming the dominant MRD player in the community oncology setting. If they execute, the upside could be enormous. That's your countdown of the top 10 takeaways from NeoGenomics Q4 2025 earnings call. If you found this breakdown helpful, make sure to like and subscribe. There's a lot more company analysis coming your way.